Well, hello, traders. Thank you so much for joining us today. My name is Greg Lewis, and I've made a mistake. I actually hit the go live button about 3 or 4 minutes before I intended to. But now that the Pandora's box has been opened, I can't close it back up. So now we're live. So no big deal. We usually try to start about 7 minutes till, and I started at 10 minutes till. So that's 2 more extra minutes of blah, blah, blah before we get started with our main presentation. Anyway, my name is Greg Lewis. I'm the marketing manager for MetaStock, and I'm coming at you from a very, very, very hot and humid South Texas today. But is it hot where you're coming from? Let us know when you're coming online. Just say, hey, my name is Bob, and it is freakishly cold where I am, or hot, or let us know the temperature. Why not? Today's speaker is Anne-Marie Baiynd. She's fantastic. She's a friend of MetaStock. She's spoken with us many times, and I know you're going to enjoy it. Our host is Jeff Gibby. He's coming at you from our studio in Salt Lake City. If I'm honest, I don't know where Anne-Marie Baiynd is coming from, but I can see she's already online with us, so we should be good to go. And right now, and see, I don't also think I set up my videos to play, so let me make sure I've done that before I hit play on them. One moment, please. Just ignore the man behind the curtain. All right, let's watch this video.
Hi, my name is Kelly Clement, and I am the president here at MetaStock. You know, one of the biggest questions I get asked is, what is MetaStock, and how can it help me in my trading? Well, if you give me about 3 minutes of your time, I can show you. MetaStock is an award-winning software and data package that has been helping traders for over 40 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock works across all asset classes, including stocks, futures, Forex, options, crypto, and more. MetaStock is designed to help you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategies should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? What are the best options to trade? And of course, how do I know where prices will go next? At the core of MetaStock are its power tools. The power tools are designed to give professional-grade analysis tools to private traders. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting. This allows you to see how your strategy would have performed over time. One of MetaStock's most powerful tools is its charts. MetaStock allows you to navigate through your charts through browser-like tabs, arrange them in ways that you see fit, or group them in layout windows that allow you to quickly access your groups of charts. And then with the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, well, you're going to love OptionScope. OptionScope puts all the critical information at your fingertips, displaying sortable, customizable, color-coded options data, even including the Greeks. You can then take this data and analyze your options with the built-in strategies with risk-reward graphs. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you'll appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has systems based off of popular strategies, things like MACD, Bollinger Bands, turtle trading, candle patterns, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. As you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to create, build, and test their own systems. And if you're a day trader, you can't do better than Zenith. the real-time news, data, and analysis package powered by LSEG, a world leader in market data. Zenith is a comprehensive and flexible system with an extremely powerful search tool, which includes fundamental and economic data. Add on our world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 35 consecutive years. To find out more about MetaStock and how it can help you in your trading, visit metastock.com or contact a product professional via phone, email, or chat.
All right, so we have 2 more minutes till our main event with Anne-Marie Baiynd and Jeff Gibby. Before that time, I'd like to let you know a little bit about Anne-Marie Baiynd. No, I'm not going to do that because Jeff is going to talk about Anne-Marie, and he'll tell you all that you need to know about her. I can just tell you that she's a fantastic person to work with, and she does really good presentations, very down to earth, and has a really good mind for the market, and I think anyone can appreciate that. Also, I want to point out that we have our Euro Summit coming up. It's on the 19th of August, Monday, the 19th of August. And the landing page is live now, but it's not yet connected to our homepage. Yours truly has to do that soon. If you go to metastock.com metastock.com/euro-summit, you can register, or you'll receive an email from us if you're on an email list, or you can wait a day or so and it'll be on our homepage. But make sure to register. It's a great thing. And we have 5 speakers, including Zahir Anwadi and Timothy Stratton and Daniel Sinig and Bobby Hiller and Zedko. I can't remember his name. It's Russian. I apologize. It's difficult for me to pronounce. Other things, do please make sure to like and subscribe. We enjoy it when you do that. It helps us a lot. And then you'll be notified if you ring the bell, if you hit the bell, of our live events, of which we usually have a few a week. Also, we do encourage you to go ahead and participate with questions and comments. We really like to keep that sort of casual flow going here at MetaStock. We only ask that you be nice and respectful of the presenter and your co-viewers. And I think that's about it. I'll let you listen to some jazzy music for the next 20 seconds or so, and I make sure that they're okay on that end. Thank you so much, and successful trading. We'll be back with you in about 20 seconds.
All right, thank you, Greg. I always feel like we're in like NASA control when you do the countdown. So I appreciate that. It's good to see everybody. Thank you for coming. As I said just a second ago, to the GoToWebinar, very special guest today, Anne-Marie. Anne-Marie's been a friend of MetaStock for a long time. And I really like bringing Anne-Marie in because she's given me some really good ideas over the years and some trades too. So from that perspective, welcome, Anne-Marie. Before we kind of get transitioned over to Anne-Marie, I'm going to read a legal disclaimer to keep the lawyers happy. And so let's do that now. If you're joining us on YouTube, like, subscribe. It helps a great deal. We appreciate it. If you want to know about the recording, we will send a recording automatically after the end of the event, and that's just automatically sent to you. It's actually the YouTube link. So anyway, today's demonstration is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information software presented today should only be used by investors who are aware of the risk inherent in trading. Innovative market analysis. Speakers and the organizers of this event shall have no liability for the investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. And as a reminder, we are not paid, and I have a wrong legal disclaimer here, but we're not paid to promote any securities. We're not trying to sell you a security. No investment advice. So there you go. Anne-Marie, as I was saying earlier, a great partner at MetaStock. Very, very smart technician. I always say this, and I don't know if you're getting a little bit sick of it, Anne-Marie, but I'm still going to say it. The one thing that amazes me about Anne-Marie is we can come bring her in, and we can say, hey, what about this stock? And it's usually some symbol I've never heard of. Somebody asks about it in the audience, and she's like, oh, yeah. Here's what they're doing. Here's kind of like when their earnings are coming out. Here's what I'm kind of, and she just has a lot of just baked in knowledge that is very impressive to me. So she also does a really, really good job, and we love having her on. So Anne-Marie, there's your introduction. How'd I do?
You did great. Thank you so much. I'm very grateful to be part of the MetaStock family.
You're definitely one of our favorites, for sure.
Today, especially when I'm here. So.
Yeah. Well, we save all the compliments for when you're here.
Okay, which screen did I give you?
Let's see.
What are we seeing? Let's see. Screen. Aha, that's the one I want. Is that the right one?
I'll tell you.
See.
I see fishing for stocks in big lakes. I see a picture of you.
Yes, there we go. We're all set. We're all set. Hey, thanks so much for coming. You know what? It's the end of the day, and a lot of us have put in a long day already, and spending time together going over how to navigate in the markets. It's great. It means that you care. It means that you are enthusiastic about what you're doing, and so am I. So I've been around for 20 years or so trading, and this is my third career. And so, yeah, I love it. I love it a lot. Okay, so assuming I know how to navigate, all right, here is how I would say we want to design a system, all right? And so the first thing, the big thing I want to talk to you about is when we trade and markets begin to get volatile, we have to lean on certain things. And the things we have to lean on is the fact that investment communities, and that would be, big investment houses, pension funds, so on and so forth, they enter and leave the market to move to other places in the market. They are never not invested. And so this is something that we have to look at and realize that one of the things we need to be careful about is understanding where big money engages and how a risk might look if we're going to play with something. All right. So one of the things we're going to look at today super quickly is how does big money look at price, what happens during rotations, and how we can adapt and move forward with them. All right. So in order to enter the market and use our MetaStock platforms and all of that, we do have to have a strategy design. And so for me, when I say follow the herd, I mean the herd of big money. And big money is going to say, hey, listen, if I lose this level, we're going to get out and we're going to rotate into X, Y, or Z. All right. And those are going to come at very important levels. They're going to say, here's what a 10% fade looks like. Here's what 20% 25% upshot looks like. We have to rotate. So let's say somebody has just 10 stocks and one of the stocks shoots the moon, but they have to model a portfolio that says, listen, this stock can only be 15%. And all of a sudden, it's now 35% of the portfolio. They have to sell it off and then move that money into some other place. And so when big money moves, it tells us a lot about what we ought to be doing. And here's something super important. To manage risk, you need to have patience. And a lot of us jump into the markets and we go, hey, I'm just going to trade this and I'm going to have a 2% stop. The market doesn't care what your stop percentage is. And a lot of times we can get into a trade and it runs right into our stop, and we get back in again, it runs right into our stop. We get annoyed and we step to the side, and then all of a sudden the chart goes where we thought it was going to go in the first place. I'm going to show you how to use big time frames to manage outside of your personal bias. And we'll look at a few things that really have told us about how to get in and how to get out. Because we think to ourselves, oh, you know, if I get out, what if it goes up another XYZ? We'll talk about trading around a position. So when we trade, irrespective of which technical analysis you use, which MetaStock platform or MetaStock plugin that you use, when we execute a trade in, we really have to have a focal point of why am I looking at this subset of the market? What time frame am I looking at? And then just focus on what you're trying to do in the market. And that should be buy low and sell higher. Okay, or unless you are short and you are selling higher to buy low. If you lose focus, you're going to exert more energy and get less output. And so that's really supremely important in my mind. And so that's why I say, you know, filter your input. Don't go crazy looking at everything. Separate how you think about the news, what you think about social media, your opinions, your friends' opinions. Try to let price be the reason that you're entering a stock. And if you say to yourself, listen, this stock has got so much upshot, it's going to do whatever you think it's going to do, let price tell you that it's going to do that. And if you feel very, very passionate about it, position small size until the chart tells you that big money is going to be involved. Because here's the thing, if big money doesn't get involved, that price is not going to go anywhere. That's as simple as it gets. So once you get in, you have to wonder about your execution out. So the first thing is, if you are a news-based trader, which I don't even know how some people do that, I would say let price tell the story the entire time. When you go for it out of an execution, you have to think about things like, all right, so let's say NVIDIA, it was shooting the moon, they got a 10-to-1 stock split, everything looks fantastic, and then all of a sudden it starts cratering. Your decision to stay long or to begin to take profit really has to be focused on something quantitative, not, oh, I heard that XYZ. You just have to say, wait a second, if big money was still in here, what price should matter as support? And that is huge, okay? So when we watch our technicals, we want to see really price what big money is doing at certain levels. Now, let's say I go, all right, my level is, 1 17. That's where the stock split occurred for NVIDIA. And one day it popped way down below 117 and it popped way up, and then it popped way down, and then it popped way up. The fact that it's moving like this should tell you, listen, if it loses that area again, this trade is toast if you're long, okay? But around the position, it is going to be noisy if big money is floating around there. Now, why? Well, because big money can be a pension fund, big money can be a 401k group, big money can be a private equity firm, big money can mean all kinds of things, and that price action could take days to resolve. But as soon as it gets there, your job is to see, can it hold my level or lose this level? And then I need to recalibrate. Sorry, I can't see I have several screens and I can't see the edge of this. Now, here's the big thing. Risk should be assessed globally. What do I mean by that? Here's what I mean by that. If you go into a chart and a trade, and every time you go in, you say, I'm just going for a 2% stop. Again, the market does not care about that at all. The market doesn't care whether you have a 2%. So use something like an average true range or something that is candlestick and materially based on market positioning. And then that way the market is telling you, hey, you know what? I know you normally do a 2% risk, but it seems to me like it's got about a 3.5% risk event there. So I'm going to cut my size in half. And when it settles out, I'm going to increase that size. That is very important. As somebody that's been trading in markets for decades, this is the big thing that I learned time after time after time. The market moves with risk at different times. And what we see with the VIX is that it has really started to rise. It fell off a cliff here lately, but it was savagely big was it the beginning of the week? I don't even remember, but maybe it was the end of last week. It got very, very big and then fell off a cliff again. And that's going to mean that the size of your candlesticks are going to change from point A to point B. All right, so here's something else that I love. All right, this is a heat map of the S&P 500. This is a 1-month chart, a 3-month chart, a 6-month chart, and a 12-month chart. Why would I put this up? Well, let's compare these two guys, the 1-month and the 12-month. Over a 12-month period, that means if you had invested in any/all of these stocks 12 months from today ago, today being August the 8th, you would be up 23% in Microsoft, 133% in NVIDIA, and so on and so forth. You'd be 20% down in Tesla. So if I look at this and I go, overall, the 12 months say that this looks like where most of the money has been going. Now, let's go to the last month. What have we seen with this kind of behavior? See all the red? That means big money has been rotating out of these stocks over the last month. So, are they rotating into support, deeper level, so they can buy again? Or are they rotating, moving into another sector? I don't know, but what I do know is in the last month, I've had a very big fade here. And I know that the only reason I have very big fades is because big money is moving out of these positions. Okay, so if you're looking for, oh, well, what's been doing well over the last 12 months? If you go Apple and then you just jump in, you're going to see, Apple, Google, Microsoft, and NVIDIA are all down almost double digits. And this says, wait a second, there's rotation occurring. And you can see how green utilities are up here versus what they look like, you know, down here. In the last, so for instance, this 12-month says Duke Energy is up 22% for the last 12 months, but the last month it's up 10%. So if you're looking at that and you're saying, ooh, maybe I go there, if half of a yearly move has been moving in 1 month, you know that that's really tired. So this is one of the big ways I go, all right, who's been good? And this is why I've picked out some of these. They've been good, but they're on fading formations, and we can figure out what we want to do from there. So let me, I want to close this. Yes, I do want to close it. All right, so here we are on the MetaStock platform. We're going to look at a lot of charts. First of all, I want to look at SPY. And we're looking at a weekly chart. Let me make sure that my PowerPoint is gone. Yes, okay. And we're looking at a weekly chart. My system is just running very slowly, not sure why. Might be GoToWebinar. We can look at a weekly chart and we can see this formation has given us 1, 2, 3, 4 weeks down. And it came down here, and this entire week it's been bouncing. So what does it tell us? Hang on 2 secs. Let me pull my chart up here, and let's go a little bit wider. And here's how I would position this. Okay, so this is target rich trades. It's got the buy zone. Let me show you this. I love playing with moving averages. Okay, and so this moving average is the adaptive moving average simple, and it's a MetaStock, cycle, volatility, and the two of them combined. We're looking at both of them together. I really love this. If you don't have a moving average that you're married to, this is a fantastic one that gives you overall trend. So what do I use a moving average for? It tells me the general direction of everything in the near term, okay? And so we are looking at a move that started, you know, November of 2023, just going absolute bananas. It's just zooming up, and then all of a sudden, it stops going higher. Number one reason to say I need to take some profit. It stops going higher, and then it begins to break down support. So the slope of this adaptive moving average tells me, listen, it might fade, but the traders are looking for value. So I need to find out what that value is. And these dots are support and resistance zones. I like to look at them as areas. Once the chart comes into the zone and then recovers over it, it tells me that I can buy, okay? And so this 517 area told me some very nice things about it. Here's what I also like to look at. If you can notice, you'll see there are gaps between this week and the following week when the market was going absolutely bananas, moving straight up. And you can see that it filled in this gap. It has not filled in the gap below, right? Not yet. It hasn't filled in this gap below, but it did fill in this first gap. And today it sits on the way to filling the gap above, which is this number at 533, right? 531, 533. That's where this chart is bouncing. What is the takeaway? The takeaway is price action is still bullish. We've broken down, and so the buyers are on the back foot. They've got to get up and over this candlestick right here. They've got to get up and over 540 for them to breathe a little easier. So your question might be, all right, so they gotta get up above 540. What does that mean about me taking a trade? Well, we're in a sell zone. And whenever you see a sell zone setup using target rich trades and your moving average is up, it's telling you, listen, you can sell that area, but you need to look for support below. And when your chart starts making higher lows, you know that you've got to take profit. And so this is the gap area. If we resume 540, traders going to fight here again. But if we hold it just like this, close, 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 up above the zone, we'll be off to check out 560 again. My thought is election cycle coming up, economic numbers sort of getting a little bit soft, Fed saying they're going to lower the rates. It could punch up a little bit higher, but we are very likely to sit in a zone that does not give us new highs. Now, that's just my opinion, just to be sure. Now, we're done. Let me show you what, no. So let me show you what the cues look like. I don't want to do that either. So here are the cues. A lot of us have been involved in tech, of course. Tech's going to rule the world. We know that. But the selling of this look at how it's moved up. It's just moved up like a house of fire. And so our sales, our short setup came right here when we stopped being able to close higher. One of the big things you can do when you are holding on to a trade, once it stops closing higher on the week, it's time to take some profit. Well, Anne-Marie, I only have 100 shares. Well, would you like 100 shares where you take 50 of them off and you collect some really nice gains, or you just want to hold it until it falls off a cliff, right? The buy and hold event is going to become, well, I think it already is. I think it's a largely obsolete event because of increased volatility. My opinion, again, please don't fret about that, but we want to trade around a position. So we keep a core position. I'm going to use 100 because it's a really easy number. Maybe you sell 75 of them, and then when your price action starts stabilizing, you can add back to the position. Okay, so interestingly enough, the cues filled all the gaps. It filled the gap here, it filled the gap here, it filled the gap here. So these guys are in good shape. Now, I had this line from a while back, and I said, all right, maybe it'll hold that area, but it didn't. It collapsed right through it. So how do you use a line that gets broken? Well, if you think it's support and it gets broken, look for the recapture of that line, and then you get to position into the trade. It'll also tell you what kind of risk, if you're looking at a weekly chart, what that's going to look at. And you can also use the target rich trades resistance and support lines that we've got here on the dots. I try to make them unobtrusive so they don't do that much. But you can see right here, you see this, a new short setup, old resistance, and then a ton of buying action that's really pretty noisy. So what's likely to happen? Traders are likely to argue right at this spot. If it moves up, let it come back and retest your area before you go long. Allow a couple of days. Don't go directly at the line and go, oh, all right, that breached over it. Now I'm going to go long. You could do that, I will say, but you're going to open up a lot of risk for yourself. And you could get stopped out several times where they're trying to make a decision, sort of like this, right? This takes 1, 2, 3, 4, 5, 6, 7 weeks dancing around 445. And then here before the buy setup goes, 1, 2, 3, 4 weeks before it manages itself. So be careful about that. All right. That's the only thing I want to say there. I do think the bounces end up being selling zones. I don't see us moving higher, but how will I be wrong? It's going to get up over 445 and it's going to keep running. Okay, so IWM, same thing. I heard so many people on social media go, oh, this is the absolute breakout. The IWM has just been lagging and this is it. It's going up to whatever, 240, 250. And my thought was this. Yes, a lot of money was rotating into the IWM, but the IWM is the ETF for the Russell, and the Russell are the small caps. And here's the very interesting thing about small caps. They need financing. And if we have a Fed that has to lower rates because economic conditions are soft, that might help how much financing costs, but it's not going to help those companies sell more goods, which is what they have to do to leave the Russell and get into, you know, the mid caps or the S&P 500. And so this entire environment says to me, any kind of bouncing in the IWM is going to lead for me to sell it. So I want to share something that a lot of active traders talk about, and it's called exit liquidity. And what it says is the following, in short. When a stock or an instrument of any kind bases for months and months and months and months and months, what it's telling us is that people are accumulating very much in this particular zone. And I want to show you, let's draw a box. Let me show you this box. I'm going to draw this box from here all the way across to here. Okay? So why do I not go all the way to the top? Well, I don't go all the way to the top because the retest event for this box, I'll say it's here. How about if I do that and pull it all together? When something's been basing and basing and basing and basing like this, when it breaks out, we know that people who are here want to sell at higher prices. So how do we know what prices they're going to sell at? We look at areas of old support that became resistance, looking to the left, and old support that became resistance. So if you stare all the way across, notice that's exactly where they began to really heavily sell. And then they broke this level down. And now they're trying to hold this low, higher low, sitting right here in this form. So I'm going to draw two things. Now, the follow-up question might be, well, can't I go ahead and buy the IWM here? You can. Just be prepared to know that exit liquidity, or the place that all these folks have been playing around, they're going to get out of it. Now, look at something else. I am going to copy and then paste and then activate. And I'm going to move it right up above in a measured move, right? So look at what this measured move did. It took me all the way to the edge, and the breakaway, take a look, 2 weeks above it. And then It literally only had 1 week above this formation here, and then it rotated right over, still sitting inside of the space. So if you say to yourself, hey, I want to go long here, realize that a ton of buying is at the 200 area. And where are we? We're at 220 or so right now. So there's a ton of risk in going long here, but on the dips, you'll be in good shape. Why? Adaptive moving average trending up. We have a line underneath here, and we're still in a breakout pattern from this area of congestion. Okay, just a little tool that I use right there. If you're thinking about the IWM, probably ought to wait to move to the next space. All right, so Amazon. I picked Amazon because overall it's done really well during the year, and now it's in a space and people are saying, oh, you know, can we really trust Amazon to do XYZ? Listen, Jeff Bezos has still got a very, very tight leash on what he does. And the last time we have here was a solid buy setup from the system. And wouldn't you know it, it comes right into it and rockets all the way up. You're going to be looking at these areas. Here is the weekly. It's trying to fill the gap. Super important. Trying to fill the gap. My thought is, because this was a solid buy setup, pullbacks into this zone, potentially the low around 160, going to give us a really nice buying formation. Here's the rub. Because we are underneath this adaptive moving average, we have to think to ourselves, wait a second, look at all of this noise, right? Notice, huge level. Remember I said earlier, when you come into a really big level, sometimes it takes days and days and days to establish what the traders are going to do here. And so notice, huge level, double top, very nice short from this edge. Here, not so much. Short, then the traders came in to buy. Short, traders came in to buy. Short, blown out of the short, brand new buys, and then all of a sudden, the traders came in and said, you know, as soon as I lose this level right here, and what level is this? 185, I am going to have trouble. Now notice, the 185 gets lost, savage move up, savage move down, savage move up, but the resolution of price is underneath. And so when you see that, you know, hey, I got to get out of here. I got to get out of here. This price action looks absolutely terrible. For Amazon, it's still a heavy hitter, but everything we are looking at right now has to climb up a wall of worry. Not that we can't, but you want to be very careful up about that 180 level to take some gains, because we are no longer in an environment where everything we buy goes up like a rocket ship to the moon. It's simply not in that space. So Microsoft, same sort of thing. Take a look, old support. Again, what do you do when you see an old support line? You wait until the traders recover. Now you might go, well, Anne-Marie, you're looking at a weekly chart. The week's not over. See, this line is going to show up whether it's on a weekly candlestick formation or a daily candlestick formation. Wait for the day that it closes up over that level, and then you can chase it. But chasing tells you, hang on now, if you're in a space where you're chasing, you need to see where all the other sellers were sitting in a space. And it looks like this area right here, 409. If we can close the week tomorrow, if we can close the week over 409, look at what could happen. It could rocket up, and then pull back, and rocket up and then pull back. So don't chase it. If it moves up, you can put a limit order down there, and your stop would be this gap area because it's going to have a thin volume profile where very little price action has transacted. And then you can go, all right, well, there's my stop. I'm going to buy it up here. Here's my stop. And then I'm going to run it into old resistance. That's going to be 431, maybe 436. And then I think the chart has, you know, a little bit of a fade action on it. I am not bearish, but I am also not bullish. Certainly not bullish. Now, here's something that's just been, I mean, this thing's been a house of fire. I went to Costco while I was in North Carolina, and it was the biggest traffic jam I've ever seen. Now, I went to Costco because I had, we just had a lot of kids and grandchildren and everything all together. And, you know, I just said, all right, let's just buy in bulk and go in with your membership, and just absolutely full to the brim. The place was packed. And so their business model is working. Nevertheless, 1, 2, 3, 4 weeks down, and then look at what it does. It gives us one more week lower. It opens the week lower, but now it's bouncing. So this is a troubling one because I have lower highs and lower lows, but it's bouncing very hard off this lower low. So my suspicion is that it's going to try and run into the heavy resistance, which is, you know, right about where it's at right now. I would say, what is this number? 845, maybe 8. Yeah, I like 45. And then it's going to choke there for a little bit. The pullback is going to give us the buy zone. I want to see a candlestick that gives me a higher low, not a lower low, to confirm upside pressure. So that looks great. If it comes into the round number of 800, it could easily drop. Why? Because it's broken support. It's tried to recover. And if it can't recover, I don't know who's going to be here at 800 to hold it. It could be there, but it might end up being where all of these candles are sitting. And that is, what's that, open? You know, 788. So maybe you use an option for something like that. I don't know. I don't want to talk about options too much, but it is certainly something that I use almost exclusively. Take a look at Tesla off a cliff. It's down 20% on the year. You can see what's going on with the traders, though, right? This is where you have to step back and go, wait a second. What is everybody doing here? Well, they're buying around the 150 area, right? Buying around the 150, especially lately. But they cannot seem to hold a bid over, what is this number? 250, right? So they're having some trouble. Definitely having some trouble. What do you want to do? Don't trade inside of that. Wait for it to either break out and retest properly, or break down and retest properly. This is a very big range. My thought, if it bounces up here, it's a sell zone. And if it comes down here to 150, it's a buy zone, you know, with about a $15 stop, if you are a big fan of Tesla. JP Morgan, just shooting the moon. Why? Well, because they are the clearing firm for BlackRock and the Fed and a number of other places. They truly, if there was somebody that might be Big Brother, I would say that would be JP Morgan. But look at how strong this chart is, right? Of all the charts we've looked at, This one is just shooting the moon, right? Almost a perfect channel right there, but bouncing off of these edges in an upside pressure event. Do you see how strong this adaptive moving average is? I know, here's what we love to do. We love to pick tops and bottoms because it makes us feel like heroes. But when you take a short, when you've got an adaptive moving average like this, you better be quick or you're going to be dead. No doubt about it. Hyperextension away from the moving average, great place to take the short. But the second it starts bumping into that moving average, especially if it's bumping in from coming from above, you better get out of Dodge. This thing is solid and it's holding steady. Any pullbacks to the 200 area, potentially a great buying opportunity to get us into only resistance. Why? Simply because I've got 3 weeks of desperately trying to get up over 212 and not getting it. So there's maybe a 7 or 8% rise up here. Watch for a failure to hold the region above here, and you could probably get a short from 212 to maybe 180, 190 if it holds. But you got to be quick or you're going to be dead. It is really, really this is a chart where you go, hey, listen, when there's blood in the street at this juncture, I'm going to watch for my weekly and monthly levels. When it comes down there, I'm just going to buy a little bit and rotate it out when I'm on the top. Again, another great stock for options to be played on. All right, Eli Lilly. Apparently, we would rather be thin than feel good, even though Ozempic and Wegovy and all those others apparently make you feel absolutely terrible. This thing has been shooting the moon since these weight loss drugs came out. And look at where it bounced. Here's my level. That's my support and resistance from TRT. You can find it if you have the add-on. I believe that is an indicator that you can add on to it. Remember, when it loses it, look for it to recapture it when the pressure is as upside as it is. Look at where this thing came into. Now, here's the sell zone, right? Short setup, sell zone. Why is it so quickly reversing? Because the trend is absolutely atrociously high. And so what it's doing is simply people are coming in and going, holy cow, I'm buying this on the cheap. Where might we be able to get involved? I say, somewhere around 800. If it pulls back, that's a great place to say, okay, I'm going to try it at the 800, and then, I'll let 770 be my support. Again, a very upward sloping chart in general. Listen, things don't go up forever. So what you have to do as it continues up, watch for it to fail to make new highs. All right, here's everybody's would-be darling, right? NVIDIA. Look at the slope of this thing, right? Super steep. So people are still thinking, you know what? I'm going to buy the dip. And when this moves, oh, for heaven's sakes, when this moves, it moves pretty savagely, right? Look at the trend line. Here's the rub. Here's the big rub. See this line right here? The gap up right here into the resistance. Look what happened in this weekly candlestick. It came in all the way to the close of the prior week. And guess what? No buyers stayed there. There was not enough of a bid to keep price action higher. And so it rotates right off the edge. So what do we think from that? We've got to look for a retest or a bottoming formation in the chart, old resistance, new support. And that's going to come maybe around the 90s, 97. It could also break all the way down here into the 88 region. All right, and then try to settle out. But notice, resistance, resistance, breaks out, comes down, loses the edge, but fills the gap. Look at how well it filled this gap right here, almost to the penny, fades just a wee bit more, and then it recaptures. Gap fills are super important in a chart. And there are a couple of things. Maybe next time when we do our Zoom call, when we're working through these studies, we can talk about what traders, big money traders look for in terms of percentages off their highs. There's some fantastic statistics on there. So do you think I should stop here, Jeff, and answer some questions? I've been going and going and going. We've only got about, 13 minutes left or so. I don't know if folks are looking for something that I can answer for them. Or...
This is going great, in my opinion.
Okay. All right. Well,
Jesse wants to know.
Yeah, go ahead.
We have a couple of questions that have come in. If you, I think it's a good time. Sure. Jesse wants to know, how are you doing, Anne-Marie? So.
I'm great. Thanks for asking.
Another question that's coming in is, do you primarily deal with stocks, or does this work on futures? Do you apply these kind of studies to different instruments, Bitcoin, that kind of stuff?
So here's the beauty. Because the system that William helped me design inside of MetaStock, because this system is based on emotional flow, I would say, the same systems and strategies that I'm using here breaking down stocks, going to be exactly the same for futures, exactly the same. And really, if you're plotting options, it works for them too. It's just a little bit sticky. So what do I primarily trade? I primarily trade stock options, futures options, and futures contracts. And so that's where my bread and butter sits, because I use MetaStock for levels of interest that sit inside of the stock. It gets to tell me, hey, here's where the option should be focused. I am really a caveman when it comes to option trading. I just look at price and how expensive something is, and then, I go from there. So that's the answer to that question.
One thing I was kind of curious about is we're looking at a lot of weekly charts. Do you typically make decisions on a weekly basis, or do you go down to the daily basis after you've seen the weekly view?
So that's a very good question. My levels are based on weekly and monthly observations. And so I know, so for instance, my thought with all the futures today was, hey, listen, I got to buy the dip because I'm in a congestion zone and the major traders are in an accumulation space. And so from a very big picture event, this is what's happening. And so I look at the big picture, and when I'm ready to execute, I will telegraph down to tighter time frames. But I do not get my price points for execution from anything smaller than a weekly chart.
Perfect. That catches us up on all the questions. So all right. I'm interested to see what you have to say about XOM.
So Exxon, you can see, here's how this works. here they are accumulating. That means everybody has said, you know what, when it comes down to this level at 84, I'm going to buy it. And I'm not going to buy any more up here. I'm going to sell off a little bit of it. But if it comes back, I'm going to hit the bid and I'm going to buy it all day long at 84. So let's say I sit here for weeks and weeks and weeks and I go, yep, I'm buying it at 84. What I want to do is sell it in a measured move above. Let me draw my little box. Here it is. I'm going to duplicate that. Then I'm going to paste, and then I'm going to get one of them, and I'm going to put it up here. And I'm going to say, you know what? I'm going to double my money. I want to get in at 84, and so I took it for a range from 84 until 100. So what is that, 16 bucks? I want to get another 16 bucks there. And so that's going to be where a lot of people that accumulate and then as part of a distribution, that's how they'll do it. Now, on the bigger picture, they're doing the same thing at a higher level, which tells me energy is about to see another big breakout. Okay, so here's what I suspect. There's going to be more capital expenditures in the energy space as we become more self-reliant. And so if we draw a brand new box and say, all right, I'm going to have a look. Here's where my resistance is. I'm going to look from maybe 101 to 120. And if I come out and hold it, I'm going to get a cheap long. What do I mean by a cheap long? A long that has a very tight stop. And I'm going to try and trade it into 135, right? So how do I do that? I can just buy it outright. I can buy an option. I can sell a put. I can do all kinds of things that'll allow me to participate. Here's why I think this is going to break out and move to the north. The only thing telling me I better temper my desires on the move upward is all of this downward flow, right? That's a lot of negative volume there, but it could be, hey, I'm just waiting for it to break out. I'm just waiting to see who wins the election. You know, both sides of the aisle are very interested in a de-globalization and a bringing things back home. And so this is what we're looking at. But if I have this low and then I break out and I have a higher low, if it comes back in here to say, you know, I am really digging this trade. If it comes back here to 113, I'm going to buy it. I'm going to buy it. And what am I going to look for? I want to see it hold over 120. If it can't, I'm going to cut and run. If it can, I'm going to hang on. And then every time it comes back and tests my adaptive moving average, I'm going to buy some. So that's what I'm going to be doing with Exxon. I do believe energy is going to see its resurgence. Apple the same way, it expanded massively. Take a look at that. But look at where it bounced. Folks, if there's one thing you could learn that will pay you back in spades, old resistance is new support if you've made a new high before you come back to retest. All the time. All the time, so many times. And so if we do a measured move, I want you to see how prevalent this measured move action is for traders. Here it is. I'm just going to lift this one because it's got the ledge. Closes right here at the highest close. This, a little bit of a blow off top, but again, accumulation, and they want a 1-to-1 distribution. Break it out of the range. You see it time after time after time after time. It is just what the traders love to do in a nice mechanical way when they're trading. This one has been an absolute beast. Coca-Cola, look at this thing. Now, the big thing to sit down and stare at is, how big is this range? My thought is that this range of accumulation is years wide, right? 2022 wide. Take a look, right? I don't know if we want to go all the way down here, because that feels like, I don't know. But if I'm being nice and easy on the formation, maybe I use this one and it gets me close enough. The doubling of that from 55-ish to 65, right? That's $10. And so, we're looking at potentially 75 here on the breakout above this area. So what do we want to do? Do you see how far away it is from this adaptive moving average? Charts do not like to be far away from an adaptive moving average. It's the power of the adaptive average. The further it gets away from it, the more you have to count the candles and go, wait, I made the lower high, I made a lower low, I made a lower high, I made a lower low. The second that stops happening, it's very likely to go back into that average. That's the power of the adaptive moving average. I have used it stock from MetaStock. It's got nothing different, just like this. And I'm using a combined method for the cycle and volatility. I absolutely love it. It's a great way to see trend and go, wait a second, I'm really far away from it. Let me see if I can come back and then break out again. All right, that's it for me. Anything anybody wants to ask? Certainly, I would hope that, being a part of the MetaStock community, that you'd be able to join us for our Zoom. We'll go through all the charts that you want, 1, 2, 3, 4, and you'll be able to have that, of course, for yourself to study with.
Awesome. Let me talk a little bit about that. I don't see any more questions. Anne-Marie, I always want to thank you for your time. That was a great presentation.
Pleasure.
I even took notes. So anyway, let me go ahead and I'll take the control over. We'll talk a little bit about the upcoming class. It will actually be in GoToWebinar. It won't be in Zoom, but it's going to be an awesome class. Wow, my hands look massive if I do that. All right, so I'm going to go ahead and kind of talk a little bit about that. It's free to everybody that owns the Target Rich Trades. I'm going to talk about how to get that as well. Before I let you go, Anne-Marie, I wanted to say thank you for doing such a great job today, and thank you for everything over the years.
My pleasure. I love the MetaStock community. I really do. You guys are rock solid. So dedicated.
Okay, let me see. Let me hopefully share the right screen. Okay, cool. All right. Thank you very much, Anne-Marie. All right. I do want to talk a little bit now about the Target Rich Trades and the add-on and kind of how it works and all that kind of stuff. This has been an add-on that's been for sale for a while now. We've updated it quite a few times as well. And the cool thing is every time it has an update, it's always been just kind of some things that we added and wanted you to have, and all of the updates have always been free. So if you've had it for a while and you haven't downloaded it and got the new version, make sure you do that. So I'm just talking a little bit about what it does. Anne-Marie did a really good job of showing it. You do have the Expert Advisor, features the automatic detection of the support and resistance, tells you if you're in a bullish or a bearish trend, gives you setup warnings and trigger warnings. This is a shot I just took just about a month ago in terms of the CBOE and kind of how I was looking at it like that. Detailed commentaries. One of the things I really like is the detail and the thought that Anne-Marie put into actually putting together the commentary. So if you look here, The most recent signal right now is neutral on a swing trend, and on a short-term trend, it's neutral. The trade signal, the most recent one was the buy zone. It gives you and breaks down all of the kind of details, shows you the recent signals, where the support and resistance are, information that you should have on taking partial profits. And then also under there is a complete checklist of the checklist Anne-Marie goes through when she's taking a trade. So there's explorations. We just put in some work into the explorations, but you can use the explorations to go through the market. You can use them to scan and find long entries, new bear, new bull, new short-term trends, recent inflections, new signals. I always talk about how I love scanning, because with scanning, it gives you the ability to go in and, focus on those stocks that actually have an opportunity and ignore those stocks that don't have an opportunity. And so it does a really good job at that. It does have a system tester. You can go in and test the ideas and see how that works. One of the things that we decided would be really, really helpful is, and this is kind of what we're talking about, if you own target restrictions already, you're going to be invited to this. But if you haven't got it yet, if you get it between now and next Friday at noon, we're going to invite you to a customer-only training class. That class is going to consist of 2 parts. The first part, Anne-Marie is going to be going through charts and talking to you about kind of the process that she uses to evaluate trades. The second part, I'll actually be kind of going in and talking about, here's how you set up a scan, and here's how you kind of do some tips and tricks in MetaStock to kind of help you get the most out of it. So that's going to be, again, next Friday, August 16th, noon Eastern time. So normally the add-on is a one-time cost, so you only have to pay for it once. It's $4.99. Here at the webinar today, we're going to give it to you for $3.99. That's a one-time cost. If you don't use MetaStock, I'll tell you something about MetaStock. MetaStock's been rated the best software in its price category, and it's been rated that for 30 years in a row. So with this, if you get this and you want to pick it up and you want to use it with MetaStock, we're going to include a free trial to MetaStock. That's a 30-day trial. We're going to throw in a money-back guarantee. We'll help you install the program, get it running. You'll have access to that bootcamp training that we're going to open up for all customers next Friday. And so if you want to do that, if you want to take advantage of that, metastock.com/AnneMarieA, 800-882-3040 is our phone number. And you can also reach us at metastock.com/saleschat. Lastly, if you're watching us from YouTube, make sure to like and subscribe. Helps a great deal. We appreciate it. If you have questions, make sure to ask in the chat. And we look forward to seeing you the next one. So give us a call up, 800-882-3040, metastock.com/saleschat, and metastock.com/AnneMarieA. Thanks for coming, everybody. See you at the next one.
Hi, Kelly Clement here from MetaStock. Before you go, I have 2 quick things for you. 1, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTubebook, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those 2 things. Thanks for joining us, and keep on trading.